morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The Reserve Bank of India rejects the proposed merger of Indiabulls Housing Finance and Lakshmi Vilas Bank. Reliance Jio Infocom will now charge users 6 paise per minute for voice calls made to rival phone networks. Torrent Pharma's largest plant in Gujarat has received a warning letter from the US FDA. The plant contributes a bulk of its sales in the US market. Oil prices rise despite a rise in US crude inventory as tensions between Syria and Turkey raise fears of a supply disruption. And IndusInd Bank, along with TCS, will be the two nifty companies kickstarting the second quarter earnings season later today. Let's talk about the US markets first. US stocks ended higher, but off their intraday highs. They pared their gains in the afternoon after a report that China was not expecting major progress in trade talks that are expected to kick off later today. That is with the US, of course. Ranita Young of Bloomberg News brings us all the updates from that Wall Street session in this report.
U.S. markets ended higher on Wednesday with all but one major S&P 500 sector gaining in rather thin volume during the Yom Kippur holiday. Now, this happened as China revived hopes of a trade deal with the United States. Now, specifically, Bloomberg reported that China is still open to a partial trade deal with the U.S. This made chip makers lead the S&P 500 during the session, and AT&T barely changed more or less after saying that it'll sell its Puerto Rico and Virgin Islands operations. And Facebook CEO Mark Zuckerberg will testify before a House Financial Services Committee on October 23rd about the company's cryptocurrency coin. Now, meanwhile, we did see some commodities rebound on that renewed hope of a trade deal between the United States and China. This included cotton and copper, and also WTI crude oil, which rose as much as 2% during the session. And Treasury slipped a little bit. Gold hovered around unchanged. No surprise there, since investors were pretty risk on during the session. And that's a look at your Wednesday Wall Street action. In New York, I'm Ranita Young for Bloomberg News.
All right, let's take a look at the Asian markets as well now. Rosalind Chin is joining us live from the Bloomberg studios in Hong Kong. Good morning, Rosalind. All eyes turn to the negotiations between the US and China. Turns out that not too much progress is expected, at least from the Chinese side.
What a morning has been, can I just say, Alex? There has been a lot of movement on the markets this morning, and some of them, in fact, have been reversing their earlier losses. Yes, you're right. There was a report earlier saying that not a lot was expected out of these negotiations, but in fact, a Bloomberg report has said, has actually been reporting that we're expecting the talks to go ahead. As expected, Liu He, the Vice Premier of China, is expected to stay on for at the full length of the talks, which is Thursday and Friday, Washington in the US. Bloomberg sources saying those top-level talks are expected to go ahead as scheduled, with Liu He and his delegation scheduled to meet the U.S. Trade Representative Robert Lighthizer and also the Treasury Secretary Stephen Mnuchin as planned. White House saying they're not aware of any changes in plans to Liu He's travel. So that slightly debunking the former report that had actually made markets move, because we did see a lot of the markets trading lower earlier. Now, some of them actually reversing those losses. So we're seeing the Nikkei 225, for example, now making gains of about 0.25%. We've also got the S&P ASX 200 just about staying in positive territory, just up by 0.06% at this moment in time. And in fact, in the last hour or so, we did have reports from Bloomberg saying that the US is weighing a currency pact with China as part of a partial deal. China has been holding out, saying that it is willing to consider a partial deal with the US that may include purchases of US commodities. So there's a lot going on, moving around this trade story this morning. That, of course, is having a big impact on the markets. Here in Hong Kong, we did see the market open just a few moments ago. It has opened lower, down by nearly 0.5%. Shanghai Composite open, not much change, down by less than 1/10%. Kospi playing catch up after a holiday yesterday, losing nearly 0.9% at this moment in time. On the word of China, the yuan, we did see it moving on that earlier report that you mentioned, but it has in fact now erased all of its earlier losses after Bloomberg reported on that currency pact. And just a quick word in case there are some rugby fans out there. Of course, there are many people watching that Typhoon Hagibis in Japan, bearing down, heading closer and closer to central Japan. The NHK reporting some World Cup rugby matches may be moved, which has a big implication for results, of course. And the BBC has reported that the England-France match has been called off. So all things many people in our realm will be watching. Back to you.
Thanks so much for that, Rosalind. Well, let's talk a little bit more about what Rosalind mentioned was at the center of attention in trade today. It's with regard to the conversations or the negotiations between China and the US. The Chinese delegation has landed in Washington to meet US representatives to chalk out a deal. Tom McKenzie and Sarah McGregor of Bloomberg News brings you up to speed with everything that's going on.
So the SCMP reporting that the Chinese delegation will be cutting short their visit by one day. Essentially, that the deputies who have been putting the groundwork in play ahead of the meetings between Liu He and his US counterparts Thursday, Friday in DC, that essentially they'd made no progress. The forced text transfer was not on the table. That wasn't discussed. China refused to discuss that. State subsidies was not discussed either. The only things they talked about, it seems, are agricultural purchases and intellectual property, and crucially, China failed to persuade the US to agree to holding off on those additional tariffs come October the 15th. So it does seem that unless there is a radical change in tone from these two sides and massive progress achieved in the next 12 to 24 hours, it does seem we're looking now at additional tariffs come October the 15th, and then again, potentially December the 15th as well.
Sarah, would it be fair to say that nothing much has really changed, at least when it comes to the demands from both sides, since the talks broke down in the spring?
Absolutely. I mean, I think there still were even question marks up until this week, really, where the starting point was for the talks. They did have a text in May that the U.S. described as 90% agreed to, and then, of course, accused China of reneging on those commitments. The U.S. always wanted to go back to the text of that agreement. But, of course, China, as we've seen from reporting from even our own sources, has said, it wants to take those big issues like state subsidies and IP theft off the table and go for some low-hanging fruit. So, I think the fact that, the mood music is bad going in, we're seeing reports that there isn't much progress being made at the deputy level isn't surprising. That being said, when the principals do meet, there is that chance always for progress. Once they sit at the table face to face, perhaps Trump himself can intervene. They're taking place in Washington, and that's where President Donald Trump will be tomorrow. So we're going to have to see exactly how this plays out. It'll be very interesting to see, the statements that they release and if they're able to keep the talks going Thursday and Friday.
And while the trade talks are going to be front and center, there are also several other moving parts, particularly in the United States, in the political circles, in the justice system. Donald Trump's alleged arm twisting of the justice system in the U.S. takes the spotlight yet again. The president is said to have pressed then Secretary of State Rex Tillerson to help persuade the Justice Department to drop a criminal case against an Iranian-Turkish gold trader. Jody Schneider of Bloomberg News gives you the background of the case.
According to people familiar with this, several people familiar with this meeting, it occurred in the Oval Office in 2017 when President Trump asked then Secretary of State Tillerson to help persuade the Justice Department to look into, to try to drop a case against this Iranian Turkish gold dealer, Mr. Zarab, who was being prosecuted on federal charges in New York related to evading Iranian sanctions. Those were the charges. So this was a meeting, according to these people familiar, that took place right in the Oval Office, where the president asked him to help press the Justice Department to take action against, to help a client of Rudy Giuliani. Rudy Giuliani was not the president's personal lawyer at the time, but he is now. Of course, this raises all kinds of interesting questions, just as the president there's an impeachment inquiry into the president's actions on this July 25th of this year phone call to the president of Ukraine, asking him to help investigate President Trump's rival, Joe Biden, a political rival. So this is the question. There's a lot of questions here about this meeting, and one of them is, did the president really understand kind of what he was asking here, or was he just trying to sort of test the limits of presidential powers?
And you mentioned those concerns with Ukraine, for example. Of course, this also relating to concerns about the president's relationship with Turkey and President Erdogan. What do we know?
Yes, that's right. And by the way, then Secretary of State Tillerson said he would not do this. He refused, and he told, as he was leaving that meeting, he told the then Chief of Staff about it. So I think that's important to note that he refused to do this, that this did not then take place. But it does raise questions, Sherry, you're right, about the relationship with the Turkish president, who the president has had close ties with over the years. At that point, or at one point, the Turkish president was pressing for the release of Mr. Zarrab, that gold trader. This was before he cut a deal, but at that point, he was pressing for that. And of course, this comes as President Trump made the order to remove troops, 50 U.S. troops that were on the border of Syria, near the border of Turkey, and that has really concerned a lot of people on Capitol Hill about that move and whether President Trump was effectively allowing the Turks to have an incursion into that area of Syria. So lots of questions raised here. We have not yet heard from the president about this.
Let's see what else is making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
The U.S. Security Council is to meet later Thursday to discuss Turkey's incursion into northern Syria. Ground troops have now crossed the border after hours of airstrikes against Kurdish forces, and the lira fell as Turkey came in for widespread condemnation. President Trump initially indicated he wouldn't oppose the attack on a traditional U.S. ally, but has since threatened to ruin Turkey's economy if it wipes out the Kurds. Trade talks are set to resume in the coming hours, with China said to be open to a partial deal if the U.S. eases up on its tariff threats. Sources close to the Chinese team say negotiators aren't optimistic about a broad agreement to end the rumbling trade war. However, they would accept a limited deal as long as upcoming tariffs are called off. China would offer concessions on farm purchases whilst not giving in on major issues. President Trump is embroiled in new controversy, with sources saying that 2 years ago he pressed then Secretary of State Rex Tillerson to intervene in a Justice Department criminal case. We're told the president wanted Tillerson's help in dropping action against a gold trader who was a client of Rudy Giuliani. We're told Tillerson refused, arguing it would constitute interference in an ongoing investigation. Italy has sold $7 billion of bonds, more than double its initial estimate, in its first offering of dollar-denominated securities since 2010. The heavily indebted nation received orders above $18 billion, helping it widen its investor base by tapping the U.S. market. Bloomberg data show that as part of the offering, Italy sold $2.5 billion of 5- and 30-year bonds and $2 billion of 10-year notes. Struggling utility PG&E plummeted in late trade after a judge stripped away its exclusive control over its restructuring. The decision reverses an earlier ruling that denied bondholders a leading role in any turnaround. PG&E is preparing for the next phase of its unprecedented blackout across Northern California to ensure its equipment doesn't spark fires in hot, dry, and windy weather. Rugby World Cup organisers in Japan will hold a press conference in a few hours to outline their plans for this weekend's matches as a super typhoon threatens to spoil the fun. As you can see on Bloomberg's cyclone tracker function, Typhoon Hagibis is due to hit the Tokyo area on Saturday afternoon. Just as the games are due to kick off, the organising committee may change the times and venues of the games to make sure they can go ahead. Global news, 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is joining me to tell you all about the trade setup for the day and also what's happening in the futures and options space. Good morning, Agam. In fact, while we were speaking, the mood kind of changed in the Asian markets because there was a positive update with regard to the negotiations between the US and China.
Yeah.
So some of those Asian markets that were trading negatively at the start of the day have now turned positive. Case in point, the Nikkei 225. How are we looking at the start of trade for us, though? We had big gains yesterday.
Well, I'm actually uncertain as to why the SGX Nifty is in the red currently, Alex, and we're going to have to figure it out through the course of the day. But for now, what we're seeing is a 0.5% decline as far as the SGX Nifty is concerned. Do remember, we did see a very sharp uptick yesterday, so you never know. We could see about a profit taking or perhaps on the back of expectations of some such, but there you have it. Let's talk about yesterday's day of trade. It was a strong day of trade. We did see a lot of gains across the indices. The banking indices are also advancing. In fact, it was the banks which actually led the gains. Nearly 4% up move for the Bank Nifty, the PSU banking index up as much as 3%. How are the ADRs doing right now? Well, gains for Tata Motors, ICICI Bank and Dr. Reddy's. We'll be watching out for some of these names. Of course, Infosys will react to earnings tomorrow. Today we have earnings from TCS. So some key earnings as far as the IT sector is concerned, and IndusInd Bank will also be, a big stock to keep an eye on. 485 crores worth of selling from FIIs, GIs by to the tune of 956 odd crores. And on a net basis. And in terms of, well, contributors, just look at that. It is essentially the financial space, which is why we saw such sharp gains in the Bank Nifty futures. HDFC Bank, ICICI Bank, Kotak Mahindra, HDFC Limited, all of them advancing in trade and pushing the indices higher. How about futures and options? Where do things stand out there? How are things stacking up? Well, short covering coming through, so it's very evident in the futures positioning, considering we saw a decline of around 6%, and Bank Nifty futures also seeing a decline of around 6%. So clear case of short covering in both the index futures. What also stands out here, of course, is the same 500-point range based on maximum open interest in the 11,000 put and the 11,500 call. And we're keeping an eye on, the 11,200 call, which saw a considerable amount of unwinding after the index moved up sharply. Moving on, the India VIX came off again on expected lines by as much as nearly 4%. The Nifty put call ratio, well, at around 1.19, again on expected lines moving higher. And in terms of stocks, we're keeping an eye on Nalco, Siemens, Muthoot Finance, all of them advancing in trade. In fact, the top gainers on the F&O open interests are, towards the longs. Yes Bank continuing to be under pressures. That's down 5%. But we do have gains in ICICI Bank and REC. So keep an eye on that one. Century Textiles up 7%. So all in all, it's turned out to be a good day of trade, Alex. Is the SGX Nifty indicating about a short profit taking? Well, that's a wait and watch.
All right. Thanks so much for that, Agam. Now, let's talk about the big news that came in last night. The Reserve Bank of India rejected the proposed merger of Indiabulls Housing Finance with Lakshmi Vilas Bank. The proposed merger was first announced in April, remember, and there was significant changes that happened over the course of April to now. Vishwanath Nair has more details in this report.
The Reserve Bank of India on Wednesday announced that it will not allow a proposed merger between Lakshmi Vilas Bank and Indiabulls Housing Finance as well as its commercial credit lending unit. According to a statement by Lakshmi Vilas Bank to the stock exchanges, the Reserve Bank of India has sent out a letter on Wednesday rejecting their proposal for the merger. Now remember that the merger was originally announced in April, where Indiabulls Housing Finance had proposed to take over Lakshmi Vilas Bank's businesses and thereby set its own management in the bank. Later on, a month later, it reversed that scheme of amalgamation and said that Indiabulls Housing Finance as well as Indiabulls Commercial Credit will be merged with the bank and thereby that proposal will go forward. All companies had approached various regulators, including the Reserve Bank of India, for approvals for this merger to go ahead. After a wait of nearly 6 months, now the regulator is finally saying that it will not let this merger go forward. Now remember that there were already questions being raised whether the regulator will consider this proposal at all. considering that Indiabulls Housing Finance has a large real estate business under its wing, which the promoters of Indiabulls had proposed that they will hive off that real estate unit and thereby make it easier for the regulator to give its approval. Clearly, that has not worked in Indiabulls' favor with the merger now being called off. According to a statement that was given to BloombergQuint by Ajit Mittal, the group executive director at Indiabulls Group, he said that this is going to be some kind of a closure for Indiabulls Group, because it will stop putting all its energies and effort behind this merger and thereby focus on more long-term business needs that are necessary for Indiabulls Housing Finance's core business, which is lending to buy homes to customers in the market. The company as well has gone through a considerable liquidity constraint since the IL&FS crisis happened last year. The merger with Lakshmi Vilas Bank was looked at as a way to get past some of these issues, liabilities issues with deposits of the bank coming into Indiabulls' control. Similarly, for Lakshmi Vilas Bank, it has been facing considerable capital-related issues, because of which the Reserve Bank of India has put the bank under the prompt corrective action framework. They again believe that this merger could lead to some kind of capital infusion, which could help the bank come back into stronger footing. Now that the merger has been called off, it remains to be seen what exactly Lakshmi Vilas Bank will do to get out of the PCA framework and thereby become a more functional bank.
Now, Vishy also spoke to Ajit Mittal, the executive director of Indiabulls Group, and here's a piece of that conversation, in fact, what he referenced in his piece right now.
First reaction, I would say relief, because all this uncertainty, a lot of mudslinging, a lot of orchestrated campaign that was going on against a company is behind us now. Secondly, we were looking at merger more from a holistic point of view, not that it was something which was going to bring us instant benefit or something. Lakshmi Vilas Bank, as everybody knows, was virtually a terminal case. So we thought that this was an opportunity for us, because we are, having a robust balance sheet with very solid amount of capital, that this bank can be revived. And for us also, in the process, there is a long-term transformation roadmap available. So with that perspective, we had approached the regulator. But then this was always known that, regulators have their own thinking on this issue. And at the end of it, it hasn't found favor with them. So it's fine. We are again going to sort of focus on our existing business with more renewed vigor.
Moving on to earnings, TCS will begin the second quarter earnings for IT companies and indeed for the rest of the Nifty as it reports earnings post-market hours today. While margins may rise sequentially, challenges faced in the first quarter of the financial year are likely to have remained. Agam Vakil is here to take you through all of the expectations. Agam, what's expected from the IT bellwether?
Well, it may largely be a steady quarter, Alex, because TCS, of course, as you've said, is the bellwether here, and it does have a lot of advantages that were playing out as far as, for all the deals that it scored in the first half of this financial year and the calendar year. So when it comes to revenues, we're likely to see an uptick around nearly 2% in terms of rupees, expecting a growth of around 3.3%. Also expecting a considerable expansion in margins at around 25.1% against 24.2%, and net profits consequently likely to grow as much as 2%. Now, the reason why we're seeing reasonable growth is because, as I've suggested, the first 2 quarters of the calendar year have been very good in terms of very large deals scored, and they will have some amount of impact coming through. However, there will be some challenges with respect to the banking and financial services, especially given the kind of slowdown that we've witnessed in Europe. But if you keep that aside, there could be some amount of volatility as far as the retail vertical goes. But there will be deal closures. Again, this will be largely lower because of the fact that it's been on a higher base. As far as margins are concerned, we are expecting wages to be absorbed in the wage absorption is behind us. We're also looking at a rupee depreciation against the US dollar, and we've seen some moderation in visa costs too, and this is, of course, on seasonal account. So we are expecting an expansion in margins there. Finally, we'll be keeping an eye on order bookings and the digital contribution to revenues. On the whole, no fireworks expected, a steady quarter for TCS.
Thanks so much for that, Agam. All right, IndusInd Bank will be the first Nifty company to report earnings today. The merger with Bharat Financial will likely aid the lender's margins, but asset quality will continue to remain the key metric to watch. Shefali Malik takes us through the numbers that the street is working with.
A muted quarter can be expected from IndusInd Bank this time around, with NII growth of just about 5.6% on a sequential basis and profit expected to be down by about 1% again on a quarter-on-quarter basis. On a YOY basis, the numbers are not comparable because of the merger with Bharat Financial. So we are looking at the sequential growth for some of these main metrics, NII and PAT. When it comes to the breakup of the various or going into the details of the business momentum, the loan growth is expected to be around 26% and the deposit growth is seen at around 22 to 24 odd percent this time around on a sequential basis. Loan growth will be aided by Bharat Financial merger. However, we would be looking for the traction in the CV portfolio because the last time around as well we saw that there was moderation in that portfolio considering the slowdown in the auto sector, and this time around as well we would be looking forward to the traction in that particular segment along with the asset quality in the CV portfolio as well. Margins are likely to expand to about 4.1%, aided by the high-yielding book of Bharat Financial, and we can expect strong traction in the other income, which in turn will be aided by the fee income growth this time around. Operating expenses might be a bit higher due to the merger process, and we can expect the bank to use the lower tax rates to mainly improve their provisioning coverage ratio. Remember, that is just at about 43% for the bank, and it is aiming to take it up to about 60% by the end of FY20. So that is one key metric that we'll be looking forward to. However, all the focus will be on the asset quality because along with Yes Bank, IndusInd Bank is one private bank which has exposure to some of the stressed names. So a couple of data points that we gathered in last couple of days or weeks. Moody's came out with a report earlier and it said that the bank's exposure to commercial real estate is about 11%. Jefferies put out a note saying that bank's exposure to high-risk corporates is at about 2480 crore rupees, which is about 9% of its net worth. And along with that, the CV portfolio as well, which constitutes a sizable chunk of its book, that will also be key to monitor this time around. Last time in Q1, the bank had told us that their exposure to 3 stressed groups is about 1.67%. So how those the asset quality has panned out specific to these 3 stressed groups, that will be a key monitorable this time around.
Now, apart from earnings, we're also talking about several other stocks that are likely to be in focus today. Somit Sarkar is joining me now to tell you all about the stocks in news. Good morning, Somit. What's on your list today?
First, let's start off with the Reliance Industries, where Jio has introduced IUC recharge top-ups vouchers in the range of around 10 to 100 rupees. Now, for postpaid customers, they will be charging 6 paise per minute on the basis of the total outgoing calls done by the user to other networks. Now, this tariff has been introduced to recover the IUC charges that Jio has been paying to other operators, and this move will in turn positively impact Jio's EBITDA, and the tariff discount to other operators will also shrink. Now, according to Credit Suisse, Jio's IUC vouchers effectively increase the ARPU by nearly 15%, while JP Morgan believes that this is an indirect tariff hike and would be margin accretive for Reliance Jio. Now, this move will also positively impact Bharti Airtel and Vodafone Idea because brokerages are expecting both of these telecom operators to follow what Jio has been doing, and they would also bring in a tariff hike, or else they also get a room to increase that tariff hike going forward. Now, according to UBS, the EBITDA impact on Bharti Airtel would be close to 13 to 15% if they increase their charges by if they introduce this IUC tariff, and for Vodafone Idea it will be around 55 to 60%. Torrent Pharma would also remain in focus because they have received a warning letter from US FDA for its Indrad facility in Gujarat. Now, this facility is the largest US exporting facility, which is nearly 80% of the company's US sales. Now, Indiabulls Housing Finance will also remain in focus because they have considered share buyback on October 14th, while Ashok Leyland has observed a non-working days between 2 to 15 days in all plants in the month of October. Lastly, transformers and rectifiers because they have received orders worth nearly 126 crore rupees from Power Grid Corporation.
Thanks so much for that, Somit. Now, if you're a dog person like I am, having a faithful furry friend can mean a lot. And now it turns out that having a goodest boy or girl by your side could be good for your heart as well. Take a look. The earnings season kicks off today, and there's significant news in corporate India to talk about, so do stay tuned. There's a lot more coming up in just a short while. This is BloombergQuint.